Contrary to popular belief, real estate investing doesn't have to be as complicated or scary as you think. Once you understand the basics, the fundamentals, it's actually a pretty simple process. So you may be somebody who tried to get into real estate investing, but you kind of let it slide because of all the complicated jargon and terms and difficult processes. You're in the right place, because I'm going to help walk you through and simplify it as much as possible. So why real estate investing? Well, quick Google search. How many millionaires own real estate? 90% of millionaires hold real estate and actually got to millionaire status because of real estate. And more money has been made in real estate than in all other industrial investments combined. So that's one reason to want to get into it. But you got confused. There's a lot of jargon. It's like its own language. You're in the right place. I'm here to help. I'll try to explain things as simplified as possible. That way it's simple for you to get started. So in this video, we'll cover several real estate categories. We're going to talk about how you can invest and actually earn from it. And we're going to talk about some of the risks that are involved as well, and when you should actually begin real estate investing. And by the time you finish this video, you're going to be so pumped up to dive deeper. You'll see the gem under the land, the wealth, and the promise that real estate actually offers you. So we're going to divide this video into 3 key areas: definition and categories, investing and earning, timing and risk.
So let's dive in.
So first, we're going to define what real estate is. There are 2 main things to keep in mind when we're talking about real estate: the land, and then the structure, or what we call improvement. So land, of course, can have natural resources attached to it, like trees or oil or running water. And that's the first part of real estate. And then the second part of real estate is improvement. That could be a building, structures, roads, sidewalks, home, fences, and such. So we refer to both the land and the physical improvements as real estate. A lot of people will use real property as the same, like interchangeably. Real property, on the other hand, is both the real estate and the legal rights and ownership. So that's pretty clear. I think you get that. Let's move on. So there are 4 main types of real estate. And as a beginning investor, make sure you take note of one that especially catches your attention, because you're not going to want to spread yourself too thin trying to learn all these other things. So let's start with number 1. That's residential real estate. And it's currently what I do the most investing in. That house you live in, that's residential real estate. The definition also includes things like townhouses, condominiums, and anything that's used for the purpose of a residence, as the name suggests. This is the most common form of real estate and probably the most accessible real estate investment at the beginning. Can you guess why? It's because literally everybody, like every person on earth, if possible, needs a place to stay. They need a house to live in or a shelter to live in. So it seems like a good idea to invest in real estate, right? Well, hold on. We'll talk about that later. Then there's commercial real estate. And when we say commercial, we mean business. So commercial real estate is just real estate that's being used for a business purpose. So what are these properties? Office complexes, malls, any freestanding business, McDonald's, TJ Maxx, like any of these stores you typically go to are considered commercial real estate. Or it can be office space, it can be a parking lot, it can be retail stores, it can be gas stations, it can be hotels and restaurants and more. Then there's industrial real estate. Some good examples would be power plants, warehouses, factories. And then last but not least, we have raw land. Simply put, this is the woods outside. Any undeveloped land, could be farmland, basically a field. There are so many different ways that you can build wealth in real estate that you can invest in any one of these. But as promised, I don't want you to get overwhelmed. So right now I'm just going to cover the primary and most typical real estate investments. All right, let's get into investing and my favorite, earning. So the first thing we're going to talk about is direct ownership and rentals. Buying real estate is a tangible investment. You can physically touch it. Unlike stocks or Bitcoin or other investments that are just paper or a share of something, real estate you can actually physically own and keep. And it's really hard to steal a house, unlike jewelry or art. If you already own a property, even a residential one like the house you may live in, there's a good chance that it's appreciating in value right now. More times than not, real estate appreciates in value over time. So even just owning your own house can be a solid investment. But you don't just want to own your house, you want to make money right now. So there's a few ways you can do that. The first way I earned money with my own house was simply by renting out a bedroom. I had a roommate move in. Now this won't work for everybody, but I had a roommate move in and he rented one of my bedrooms. And so that helped me pay my mortgage. Basically, I got to live in my house for free. This is typically called house hacking. So if you want me to do a video on that, go ahead and post some comments below and let me know. You also might be able to maximize your space. Say if you have an in-law suite or maybe a basement that has a walkout entrance, by putting it on Airbnb and rent it to people who are coming to visit your city, or maybe they're moving into your city and they just need a place to stay temporarily. I have a lot of friends that have done this very successfully, and it's a good way to earn some income on your personal residence too. But there's also rentals, and rentals are one of the best ways, in my opinion, to earn money in real estate. A house or a property that isn't your primary home that you rent out to tenants. Because like we said before, everybody needs a place to live. So if you have a place for them to rent, that's going to be a benefit to them. Of course, the good thing about rentals is it offers a continuous stream of income. Every month, if you purchase correctly, you're going to have extra cash flow coming to you from the rent. Rentals can be a regular income stream, but you have to watch out for vacancy, because anytime you don't have a tenant in there, it's costing you money. So that is of utmost importance, making sure that vacancy stays low and occupancy stays high. Another way to make money in real estate is flipping. This is probably something you've seen before, maybe on like HGTV, or just heard your friends talking about it because it's trendy. Here you're going to want to buy at a discounted price, but it's going to be a property that needs some repairs. And that's where the value comes in for you, because you can be the problem solver. You can come in and make those improvements and sell the home at a much higher price because you've taken care of that problem and you've made it a house that is worth something to people. So the positives are you're going to get money back faster than a rental. But you have to keep in mind, you're putting a lot of capital into the building, so there are some risks there and there are some trade-offs. The third way we're going to talk about investing in real estate is syndication. Now, syndications are a much more passive way to invest in real estate, and so I wanted to include it that way if you're not trying to create a job for yourself, or maybe you don't have as much time to invest. It's a good way to start in that case. So what's a syndication? To keep it simple, it's basically just a pool of money from lots of different investors, and it goes towards buying one big property. Actually, my very first investment was putting money into a syndication. It was an apartment complex down in Texas. So the cool thing about a syndication is you don't have to worry about the day-to-day management of a property. You just have to put money into the deal. Now, there are risks with this too. You want to make sure you're working with people you trust, and you want to make sure you know how to look at the deal and make sure it's a good deal. But we're going to actually make videos on how to effectively vet deals and make sure you're getting into a good opportunity. Some of the drawbacks of investing in a syndication is, well, you don't have control. Because you're not the only owner of the property, only the managing members are going to be in charge of that. So you're not going to have any say in the day-to-day operations, but you do get a chance to earn money every single quarter. And in some cases, they'll send you a monthly check. Take note that there's a whole list of pros and a list of cons to take into consideration that weren't mentioned here, but we'll get into more detail in future videos. And then the third thing we want to talk about is timing and risk. So you know some ways to earn money in real estate investing, but should you invest right away? For almost all investment opportunities out there, the sooner you invest, the better. Why is that? It's because interest compounds. So when you get those returns and then you reinvest them in new investments, time gives you more chances to turn that money. And so that gives you more opportunities to earn more. Of course, in real estate, it's best to start early because pricing tends to go up. And if you wait, you might not get the same prices you did if you would have started sooner. But I will caution you, do not dive in recklessly. Never forget to consider the risks. You need to carefully consider location. Can this place flood? Are there natural disasters here? Like I'm in Alabama. Sometimes there are tornadoes. Like you need to take that into account. Is this a city where not a lot of people rent? Is the vacancy risk high? Is my money gonna get tied up for too long in this market because I won't be able to sell later? Are there a lot of properties moving in this area? Are there a lot of new jobs coming to this area? Is the rent high enough here easier for you to be able to cover your mortgage payments and then get some extra after, these are things you want to take into consideration. So as some final thoughts, don't get too excited with the high expected returns that you forget to look at the other factors of real estate investing, like cost and risk. Yes, it's true. In real estate, there's definitely a high probability of a return, but oftentimes with higher return comes higher risk. So definitely do your research first. That way you don't burn your own money. Because you wouldn't want to burn your own money, would you? But don't worry, because as we go along, I will show you everything you need to know about real estate investing. So now we've touched the basics of real estate investing. So what was your biggest takeaway? Comment down below. Also, if you have questions, feel free to comment those below too, because chances are we're going to film a video answering that question directly. Don't miss out on the next video either, because we're going to be diving deeper and we're actually going to show you why you should be investing in your 20s in real estate. We're also going to give you some things you need to know before buying. If you like this video and you learned something, make sure you smash the like button, go ahead and share it with your friends, and of course subscribe, because we're going to be posting a lot more content here very soon. I'll see you in the next video.